Let's get straight into it. We don't
Straight
want the stock market to go any lower.
There you go. Yeah, live on Facebook. There you go.
Alrighty. Welcome to Morning Minutes. My name is Michael Bergio and Mark Novak is with me here. And this morning we're going to be talking about the biggest drop. Where's Wally? The biggest drop. Where's the money? The biggest drop in the stock market in 50 years in a single day. Mark, what was the drop?
One of the biggest.
One of the biggest.
So we had last week in one day, stock market was wiped out 10%. The last time that happened was when the Lehman Brothers collapse happened through the GFC, and it happened twice before in the 80s. It's very, very rare, very, very aggressive. And where's Wally? Where did the money go?
Where's the money? Like, to put this this is basically some people had money in shares, their superannuation, just money in stocks. If they had $1 million there that they were sitting on for their retirement that they were thinking about selling, it's now literally 900,000, if not less. That's a lot of money. That's tough for some people to swallow instantly. So last week you were sitting your praises. I think we've had one of the strongest runs in the stock market in years as well. The last sort of 2 years has been very, very good to people, especially when it was a time when a lot of people were slagging off property and saying, well, I'm going to buy shares of the way. I think we heard that a lot the last 12 months, didn't we, Mark, saying, nah, property's no good, let's buy shares. And when we saw property, so now we've probably experienced both asset classes going through a bit of a struggle. Like up until 6 months ago, property was copping it tough, and that was probably down 10 to 15%. But that took like a year, Mark, to drop. The stock market did it in a day.
Well, that's right. It was probably a good 2 years to go down 10% in the property market, and the stock market in a day is huge. But I think it's market sentiment. Hey, Michael, like the reason that everyone's world got rocked, or the reason why the sentiment got rocked, was because of worldwide activity, in particular this coronavirus. But it's pretty hard to rock the property market like that overnight. It's never really been done.
And I think it's one of those, we were saying before, Mark, like property, it's not the prettiest girl, it's not the fastest, but it's pretty resilient, isn't it? Like
Absolutely.
It takes a while to go down. It's not one of those, it's not something that you sort of get rich quickly on, like a lot of people aspire when they're buying shares, or especially when they're buying those sort of, what do you call them? Like a cheap stock that you think is going to go off, or
speculative.
A speculative stock.
It's not property's not a speculative stock. But you know what? We've sort of also in hindsight we've fattened the chicken up a little bit. In the property market we've fattened the chicken up a little bit. So in the event of the market getting a little bit tougher, the property market, it did get fattened up. It got fattened up so much that it came back to its record high. I think we're probably pretty much back to where we were at the height of the property market 2 years ago. And the stock market, like you said, a lot of people were in love with the stock market because, your dividends are fully franked in some cases. You're not paying tax. It was just doing so well. And then so I think now it's the exciting thing that I do like about the property market is generally whenever the stock market's recorded negativeness or impacts, people generally take that wad of cash and they generally take it over to property in the order and for stability. So the exciting move that people will start making if they do what they've done in the past is they'll take their money out of the stock market, which has proven itself to be volatile again, and then they take it over to a stable market.
Yeah, so, and I think like what you said before, Mark, wouldn't be surprised if interest rates go a little lower to help stimulate that Is it today they announced? Yeah, first Tuesday.
Big day
Today's
today. Big day
today.
today for rates. So they're factoring, I think, 110% chance that the rates will be dropped. So I think most people are in agreement that they will be dropped. It's as a result of the stock market that's helped that decision. It's as a result of the coronavirus that's helped that decision. I think it was probably on the cards for a long time anyway. And that's big for Australians. Australians have been knocked around. We had the fire as well, don't forget.
Man, I feel like it's one thing after another. I just, it's pretty crazy. You look at these last 2 years. I think last year was a lot to do with politics and elections and royal commission. And then now it's been all natural. We had the floods, the winds, the fires. Now
it's like
the coronavirus.
Out of the Bible. I think the Bible says that it has locusts, floods, fires, and is it not disease?
Wind,
they use some other word.
Yeah.
But
the plague, I think.
The plague. Yeah, this is the plague. But they're all organic, natural. I do have to say, and I really got to be careful with my words on this, but nature has its way. Nature has its way. Call it, and I was discussing it with a good buddy of mine on Sunday. I use the word respawning. Respawning. That's why there is a bushfire, because it clears out all the shit off the ground. It allows sunlight to get into the ground roots, into the soil, and it allows fresh shrubs to grow, fresh trees to grow, and it kills off all the shit debris. So there is a respawning. When you look at those big floods, talk about it's like the ultimate shower for a human.
Yeah.
Do you know what I mean? Like all the roads were cleaned, all the rooftops, all the gutters, any shit was blown away and washed off by the rains. It's a real respawning that happens in a natural way. So I think we're paving way for good times.
Yeah, and I think, and I with all signs of the property market still boom, because at the end of the day, the fundamental thing is people need a place to live. You always need a roof over your head, and that's where I think the stock market, I think they're probably forecasting further drops, because when it comes down to it, that's sort of like a luxury asset to be investing in. It's not really a necessity for it. In some cases, where property, you always need a roof over your head, and there always needs to be that sort of part. So I think we'll start to see people now putting a bit more money in the real estate market, and this was on top of people looking to do more purchases because interest rates are cheap. So I think I would love to see the forecast of property growth now, because I know a couple months before this was the coronavirus was as rapid as it is, they were scheduling April this year to hit the record highs 2 years ago and to continue surpassing that. So I'd love to see those projections now moving forward. We've got a shout out to Todd on, Luke, Andrew Cole, Angelo Gutsios. He's up this early. Wow, this is awesome. Good to see. Luke Maroney said ups and downs, yo-yo markets.
Christine.
Very, very true.
Anasteg.
We've got Gillian, who's an agent from Brazil. I think he popped into the office yesterday. This agent from Brazil who watches us, feel free to pop in today.
Brazil. Geez, we're going Florida, Brazil. We're hitting everywhere. New Zealand. Now, just back to the topic of what we're talking about, Guy, and why we're on why I've got the Where's Wally image behind me on Facebook, is we're talking about where's the money gone out of the stock market. So with this biggest stock market drop biggest one-day drop in a long time, there's only really in the last 50 years we've had drops like that when the Lehman Brothers collapsed in the GFC, one-day drop of 10%. We also saw that twice happen in the 80s. It doesn't happen a lot. The exciting thing, everyone who's watching, is when the money is taken out, and an extraordinary amount of money is taken out. 10% is an extraordinary amount in the stock market. Either the money's going to go back into the stock market at a calculated time, all people are going to look elsewhere. And there will be a proportion of the people which will then, that's enough to remind them that they don't want the volatility of 10% a day. They want the stability of property. So I think the property market, we think the property market is going to prosper with that money coming out of the stock market, number one. Number two, interest rate rises potentially coming down. What people also have to acknowledge here is it's actually quite a significant drop, Michael. Because what actually happens is if you go from 1% to 0.75%, I'm not suggesting that's where the rates are going or where they are. I'm just saying that's actually a 25% proportional drop.
Yeah,
so
it feels a lot smaller when you're talking, yes.
It does. But when we were talking 8% and we were coming down 0.25%, proportionally, not a big change. When you're talking the rates are sitting at sort of 3% or 2% and you're coming down 0.25%, that's almost a 10% entire change across your repayments of what you're making. If the banks pass it on, of course.
Yes.
But that's your mortgage repayment overnight can potentially come down 10%. That is very, very big news for Australians.
That's big. So I think all signs. G'day, Mark gave us a wave on Insta, and Adele Real Estate. Really good to have you guys on. This also is on Facebook. So we're live streaming on Instagram, Novak Properties, live streaming on Facebook as well across all the agents' accounts. So what else? Any questions out there, guys? Todd, where are you seeing increased, Luke, are you seeing increased buyer activity? Maybe clients who were, because we always had the odd client that was, well, I'm going to put it in shares. So I think a lot of people who were 50-50 about where to put their money are now going to go back to property. There's a lot of people out there who are sort of always in transition. So I think it's we're going to see more and more activity in that property market.
But guys, I've always said that they're taking with one hand and they're giving with another. So whenever they've given us these interest rate reductions, they've given with the left hand. They've taken away lending and made lending harder. So they've taken away with the right hand. So although it's great news, the people that it's rewarding most are people with mortgages. The people that it's rewarding most are people with one mortgage. If people have got more than one mortgage, so if you look at the segments in the market, this is a good one for Luke. I'd like to get Luke's response on this or feedback. Luke's a buyer's agent from anyone who's watching, or any real estate agents who are watching. The fundamental markets that we're seeing do well across Sydney are one mortgage people. So first home buyers, they can get a loan. People upgrading their house, they can get a loan. So people upgrading their house, they're selling that house, the 3-bedder, to buy a 5-bedder. The banks like them as well. But the people that have a second mortgage, or the people that have a third mortgage, investment properties, or even holiday homes, or commercial properties, they're the people banks are really giving a hard time to. Not for equity, because they've got equity, but for income. So it's very, very interesting and very nice to get these interest rate reductions if you've already got the loan. But if you haven't got the loan, you're going to have a very, very, very strong income. That's what's changed fundamentally the last 5 years with all the Royal Commission, APRA, all the APRA regulations and all that stuff coming through. Very interesting.
I think I made a spelling mistake in the heading. Please check the spelling. Will do, Todd. Thank you. Always,
Todd's looking after us, mate.
Yeah, thanks, Todd. We're just some agents. We didn't do well in school.
School was not 95%.
Oh, Mark, we were supposed to talk about depreciation. Okay, we'll do that Wednesday. Remember, we said we'll do depreciation.
Shit.
We'll do that.
Depreciation will be tomorrow. Good luck with in summary, our takeouts from today are what?
Invest in property. Property's resilience. More just acknowledge. Our takeouts are acknowledge we're playing the long game when you're investing money and for the future. So property is when it's good, it's good. When it's bad, it's not as bad, sort of thing. That's what we're taking out.
That's it. And the start, I guess the opening headline was the property market, the stock market having a 10% chunk taken out of it, which was one of the biggest one-day losses recorded. And as property people, and that's why we've got the Where's Wally around me.
Yeah, where's the money going?
On Facebook. The money, just, there's billions, I think it's 60 billion, I don't know what the number is, that's come out of the stock market. Generally, whenever that's happened, Where's Wally? Well, it goes back into a stable market, the property market. Interest rate reductions today, guys, are looking imminent. That's good for the property market. It's very good for sentiment.
Yes.
And repayment abilities. And that's it.
And Angelo said Northern Beaches has always been the safest. It's true. We've always been pretty resilient. We haven't gone up the fastest, but we didn't go down the fastest. It's what you want. And I think that's the biggest message when investing. Don't pick the one that it's just a lot of people pick for the short term, but sometimes those short term decisions can be very not volatile, can be very I don't know, just it may not be as resilient, probably the word, whatever that is.
And look, I know, a great measure is Meriton Australia. They've built 70,000 apartments, and I was talking with head office yesterday, and it sounds like that they're pretty proud of their development on the Northern Beaches. It seems to be ticking better than a lot of the other developments around Australia. So it's not just going on in our brains or our minds, because that's where we are. These are national operators that are saying thumbs up to the Northern Beaches in terms of their daily numbers and weekly numbers that are coming through. It's a good suburb. It's a good district. It's a good region, and stable. I think not being particularly reliant on one sector of the market, like a Chatswood or a Eastwood. I think they're particularly reliant on that sort of China market, and then now that's been affected, they are affected. Whereas we have a really good mix of the European, the Asian, the Australian, with the Arabic, the all different mixes, Nepalese, like all different mixes. So that's great for our beaches. The Northern Beaches has got 100,000 homes in it. It's north of Sydney.
Yeah. All righty. Well, we'll be back tomorrow morning. Chris, Jason, is it Jason? Janson. Thank you, Janson. Hope I pronounced that correct. Thanks for joining in. This will be converted to a podcast as well. So if you're able to listen but can't watch, feel free. That's there. The link's in the text. I'll fix the spelling I did wrong. Thanks for letting us know, Todd. And we'll be back tomorrow morning with more.
Giddy up.
Thank you very much. Bye.
There, man.